Hello, and welcome back to the Wallfacer Labs podcast. Today's guest is Regan Bozman. Regan is the co-founder of Lattice, an early-stage crypto venture fund. Regan, welcome to the show.
Yeah, thanks for having me.
So normally I like to jump right in and not go through people's backgrounds, but in your case, there is a lot of interesting things in your background, especially as it relates to crypto. So maybe before we get into your time at CoinList, would love just a quick 30, 60 seconds of you prior to crypto. How did you wind up at CoinList in the first place?
Yeah, so I grew up in New York. I went to school on the East Coast, and then I started working in New York, like at startups out of college. And I tried to start a company. I was kind of working in like the on-demand space. This is back when like Uber was like the hottest thing around. I tried to then start a company in that space. That went nowhere, and I had no money, and I needed a job, and I was applying for jobs on jobs at startups on AngelList. And I saw that AngelList was like hiring for their kind of like ventures team. And so they had like the startup recruiting business, but their original business was like kind of like helping startups with capital formation. And so I was just like, hey, like I spent the last 6 months trying to raise money from VCs. That went terribly. Like maybe I should try to like understand how this business works. And so, yeah, I just like applied, got the job, and 2 weeks later I moved out to San Francisco. So that was January of 2016. And then AngelList spun out CoinList to build a similar business around primary capital formation in crypto about a year and a half later. And that was kind of like my journey to CoinList specifically and crypto more broadly.
Nice. So that period of CoinList, I guess, coincides with the 2017 ICO time frame.
Yes.
I think Filecoin was probably the first offering that you guys did, or
yes.
My timeline correct? So you were front row to kind of the initial craziness there of all things ICOs. I think there's maybe 30 token launches or something that you were involved with. What did you take away from that period, just in terms of one, how to launch a token, and maybe the good, the bad, and the ugly?
Well, I mean, the bad and the ugly, yeah. So like I really like got into crypto because some of the smartest people I worked with at AngelList were like helping start CoinList. And so it was more of that and less like, oh, I read the Satoshi white paper and I like had this religious experience, like the way some people talk about crypto. So I knew nothing coming in. I did not know what an ERC20 token was, as an example. And so my first like kind of job was like I showed up and they're like, yeah, hey, we have this like Typeform page on the website for like people who want to do, you know, token sales with CoinList. Why don't you like go in and see if there's like anyone legit? So I'm like, okay, it doesn't seem that hard. And I opened it, and there's like 2,000 people that have like, or 2,000 companies that have like submitted like indications of interest of wanting to do a token sale. So that was like my first exposure to like tokens and protocols. I was like, oh yeah, these are like all of these total like scammers like wanting to do ICOs. And so, you know, the bad and the ugly, like I saw firsthand pretty quickly. But I think like the good was just like there were really, really smart people. Like we worked with the Stacks team early on. We worked with the Solana team really early on. The Trust Token team, which is like how we first met. And it was just like, hey, like there's like these really smart people who kind of either just done cryptography stuff or are like coming at this from like they kind of did some financial thing. Like they built some company, they had some work experience, and they're like, hey, like maybe there's like a crypto angle where like this could actually be better in a decentralized sense, or like using blockchain rails or something. So I think that was what kind of just like kept me excited about the industry despite how much nonsense there was.
Something I think back to in that time frame is, I think you can tell me if I'm wrong, but I think it's less common today for teams to raise kind of this one ginormous round of funding up front and then think of that as like their sole kind of funding. I think now you see more progressive sales, people sell tokens from DAOs over time. What do you think about, you know, that 2017, let's raise this giant lump sum up front and figure out how to make this work for the rest of time? You know, was that model, did that have some merits to it? Was it just wrong at the time?
I think part of it was like out of necessity. Like there wasn't really like growth stage capital in crypto back then. Like I think the first Andreessen crypto fund was like 400 million, but like I don't think there was any other fund even more than 100 million. So I think like maybe some of the logic was just like, hey, like we don't know when we're going to be able to raise, like if we're going to be able to raise more funding. And so like we just need to get everything in the door that we can for like to build this. And in some cases, like Filecoin, it took them a long time to build it. So I think, there was like a reason for it, but also at the same time, right? Like people are human. You offer people a lot of money, a lot of them are going to take it, whether or not like that sets them up for success long term.
Yeah, I guess I hadn't thought about it that way, as it was maybe just more necessity driven in terms of there being less capital out there. Actually, in prepping for this, I went back and read read your 2020 crypto investor landscape. And it's funny to compare that to today, because at the time you had wrote about A16Z having 825 million of AUM, A16Z crypto.
Yeah, those were more innocent times.
Yeah, and just following that, I had heard Chris Dixon on a podcast say that they now have 8 billion worth of AUM, so 10 times that. What do you think are kind of the biggest shifts you've seen in the investor landscape, either from 2020 to today or from your time at CoinList to today? And how have those markets evolved?
I mean, I think really the title is just like, it's grown a ton, right? Maybe there were like a dozen crypto funds in 2017, maybe 24. There's probably like 100 reputable ones today, and probably another like 200 to 300 that are like smaller or just like prop capital. But like the landscape is way bigger than it was. And I think it's matured in that you have like, some more like niche funds. Like everyone kind of did everything back then. Now you have like Cooper Turley doing like something as specific as like music NFTs, the EV3 guys doing like DPIN. But maybe actually like the most interesting way it hasn't changed is like, I feel like back then there still was this kind of split on like, oh, we're going to have a hedge fund and we're just going to do liquid tokens, or like we're just going to do a venture fund, we're going to do privates. And the liquid focused funds have grown way less than the venture funds. Like I would think for every dollar allocated to crypto venture, there's maybe like 5 cents allocated to liquid funds. So that side of the space is actually still like pretty small.
And a little bit off topic, I guess, but that comes down to a structure thing in just terms of what LPs like to invest in. They prefer the venture type vehicles as opposed to the liquid vehicles, or why is that?
I think that part of it is it's just really hard to have like an open-ended hedge fund where people can redeem in a market where like 90% drawdowns are pretty common, right? Yeah. Like if you do well, you're to the peak of the 2017 cycle and like you clip carry, you basically set a high watermark on your assets at like the peak of the market. You make some money for yourself, which like you are right, you should. You're going to be underwater for like a year and a half, right? And like if your investors can redeem quarterly, some portion of them are going to. So I actually think like the liquid markets, there's still a lot of alpha to be had. And I think if you can kind of figure out like, maybe it's like a closed-end 3-year fund. Like I don't know exactly what it is, but I think there is something there. But I think it's really just like, these markets are so volatile. LP sentiment can change, so dramatically. Like, I think this is all public, but like, there's like a bunch of multi-coin LPs. I think we're really pissed that like they didn't sell Solana. Like, I think it was reported that some of them sued them. Maybe I'm wrong on that. And then of course, like they had an insane Q4, right? Helium and Solana and Rent, like all these things are way up. And I'm sure those LPs were like, fuck, like I shouldn't have pissed these guys off.
Yeah, having that money 3 years ago or 2 years ago would have been nicer though. But, besides the point, they still done well.
Yes. So yeah, it's just like, these markets are crazy. It's hard to manage an open-ended fund.
Got it. So coming back around. So when do you wind up leaving CoinList? Is that 2020 time frame or?
It was like Jan of 21.
Jan of 21. Okay, got it. Now, in between CoinList and where we are today with Lattice, if my research is correct, you co-founded, were involved with the starting of about 3 companies in that time. Dove Mountain Partners, which was a growth agency, Free Company, an angel syndicate, and Dove Metrics, which was a data company that eventually sold to Asari.
Yes.
Now, in some ways, there's actually an interesting through line there to Lattice, but I'll let you maybe talk about each of those a bit if you like.
So, yes. It's not like I'm like, some Jack Dorsey figure running like all these big companies. Yeah. But essentially, so there's kind of 2 things happening, or 3 things in parallel. Like one is like, while I was at CoinList, just started doing more personal investing. And in like mid 2020, had a few people I was really close with, kind of other operators in the space who were writing small angel checks. And we just had this idea that maybe like the sum would be greater than the parts. Like we could share deal flow, we could like size up our checks. And so there were about half a dozen of us who just started investing together. There was never like a formal fund. There was never outside money. It was kind of just like a name. And Free Companies, Jill Carlson, who now is one of the co-founders of Espresso, she was not like in it, but she came up with a name for something else. But I think basically Free Companies were these like band of like mercenaries who would like come together in medieval times to do a specific task, and then they would like disband, basically. So the name was cool. And so that was basically just like personal investing, but kind of under this brand. And so we maybe made like 35 to 40 investments like through that brand. And then like by like early to like spring of 21, and the bull market was in full swing, like allocations were getting cut back and everyone had more money and deals were happening quicker, and kind of just like stopped working. And so then like everyone kind of was just back to doing personal investing. Dove Metrics it started out, you actually mentioned the 2020 crypto like investor landscape. It started out as a Google sheet. Like I was like, hey, I think this investing thing is cool. Pretty clearly you like need to build a brand to do that. You know, what could I do for like founders that no one in the space is doing? And it was just really unclear like who was investing, who was real, who was doing tokens, who was doing equity. So I just started maintaining this Google sheet in probably I guess it was 2020. I think there was maybe an earlier version before that. But anyway, it was just like, yeah, a really simple sheet. And then Pierre Chouville, who now also works with me at Lattice, we started working together on it, and he really kind of helped drive it forward, where it was like, hey, like we could just build like the Crunchbase for crypto. No one's doing it. And so that kind of then led to it being like, I think we built like the best fundraising data source, and it was just like pretty rich data on every fundraising round that happened. We had a newsletter that would just like announce every fundraising round that happened, that probably we had like mid 5-figure subscribers. And we ended up selling that business to Masari a little bit less than 2 years ago. Our focus was on Lattice at the time. Like it was always kind of a side focus, and I think just like was a better fit there. Dove Mountain Partners was really just like a name for like consulting. And I ended up hiring a few people. There were probably 4 or 5 of us at like the peak of that business. It was really just doing like go-to-market consulting for crypto companies. So did some work with Aztec, did some work with Maple, did some work for a few other teams on everything from kind of like running community calls to like setting up Discords to like, you know, writing to network launch, to getting a token out the door. And that work kind of helped inspire Lattice, where like it just became clear to me that like all of like the work around commercializing this technology, getting partnerships and integrations done, getting a network out the door, like just very few investors had experience doing this, since they tended to not really help founders on it. And so that kind of was like, all right, maybe there's like a wedge in the market for a fund where like this is kind of like our angle.
Yeah, I think I remember talking to you around the time of Dove Mountain Partners. And in going back and actually reading some of your announcements around that, you outlined what were some of the challenges that token projects faced at the time. Developing a community, creating momentum around a launch, sales processes. Fast forwarding now 4 or 5 years or 3 years, do you think those problems are still pretty consistent in that teams face a lot of those things? Or have you seen, you know, teams and personnel get better in terms of some of this go-to-market type stuff?
I think like it's a little bit of a mixed bag. I mean, on one hand, I think clearly like there are novel new ways to get people using your product, like points programs that no one was talking about 3 or 4 years ago. Clearly the audience for these products has expanded. I think generally like there are now crypto native growth tools like Layer 3 or Galaxy on the Quest side, Spindle on the advertising side. Like I think the space has evolved a lot, but I think like the tactical, hey, like how do we get people to use this? We're launching a new L2. How do we get people to like deploy their protocols here? It's still hard, right? Like everyone, I mean, yeah, the pie is like, maybe in this market it's growing, but like people are still kind of going after the same sets of users. And so I think it's still a big challenge for a lot of these teams.
Yeah, that's one of the things I think I see sometimes, you know, tools like Galaxy, Layer 3, they're great at maybe getting people in the door, but still I think the retention and stickiness of users can be a challenge, whether once the incentives or points, whatever kind of run out, then it's kind of on to the next thing. Do you see similar stuff, and how do you kind of work with some of the teams around stickiness?
Yes, 100%. It's hard. So I think one is a Galaxy, or Layer 3 I can talk about more specifically just because I'm closer to that product. Like they've started to kind of work more on like the retention lens for some of their customers with like, hey, you kind of do these like quests or try out a new feature as like a re-engagement tactic. But it's hard. And I think like more broadly, it just speaks to like how useful is crypto for the average person on a week-to-week basis? Probably not that useful, right? You could argue holding Bitcoin is, which I think is right, but like that's not a thing you do on a week-to-week basis. It sits there. So I think the retention stuff, like, yeah, all these tools can help, but really the challenge is just building products people want.
Yes. And I guess in some sense, that is less of a BD go-to-market problem and more of a product market fit generally product type of problem. Would you agree with that? Or
yeah, like 100%. You know, I think some people like to gamble, right? Meme coins, like I bet the retention metrics on Radium, if you're bunting on meme coins, look pretty good.
Yeah.
I think there's pockets of it. Maybe a few games have like decent retention, but probably not much in crypto.
So do you agree then kind of with the general thesis of build for the degens, build for the casino, and see what happens from there?
It's a hard question. Yeah. I mean, you know, I would frame it more as like build for where the audience is now versus like the mainstream. Yeah. Saying build for the degens is not wildly inaccurate by any means. I think it's really hard to build for mainstream audiences. Like, let's ignore kind of some of the advances of like stuff like Privy that makes it a lot easier to onboard users. Like rewind to like a year ago. Like, yeah, pretty clearly, like unless your product was like insanely compelling, were you really going to be like the reason people installed MetaMask and bought ETH and like set up a seed phrase, right? Like it's really hard. So I think that building for like where audiences are now is generally like the way to go about it. I think now like it's easier to build for a little bit more of a mainstream audience, and things like Privy, which is a portfolio company, have made it much easier. I think we've kind of seen like specific swings that are just interesting. So like we have a portfolio company called Karate Combat. Did you go to the fight in Mexico City, by the way? Actually, they had one a few weeks ago.
I did not even know about that. I wish I did.
Okay. Next time. They have a karate league. You can think of it as like a UFC competitor, and there's like a mobile app where they basically built this novel gambling mechanism where you bet in the native token and you don't lose your principal, but like you're diluted if you don't bet. And that dilution basically goes to fund the prize pool. And if you use the app, like they talk about a karate token, but like it's all abstracted away, right? It's just like, oh, I have this app like FanDuel and I'm watching this karate fight and I bet on it. So I think like you're starting to kind of see like some things like that where it's just like, oh, I have this like specific thing I want to do, and crypto powers it. And I think that can get like more of a mainstream audience on board. But in general, it is very hard to do that.
So I want to jump to Lattice next, but just to wrap up on Karate Combat. So in that case, are those founders coming from the world of, mixed martial arts and putting on events like that? Or are they coming from the crypto world, but had insights around, karate somehow?
So they were running the league before they introduced the crypto stuff. They were like into crypto personally, but it's hard. And like we look at like, honestly, like I think a lot of deep in projects we look at, it's like, yeah, you kind of need this like not weird. It's hard to find a combination of people who like A, know a lot about like the industry they're going after, and B, like know about crypto. It's just like it's a hard founding team kind of like chemistry to find.
Yeah, I've talked to at least one team where it was 2 or 3 people that had a lot of expertise in energy, and then they had another co-founder who had come from the DeFi world, and I guess somehow the energy guys had started exploring crypto. But yeah, I think those can be magic when they come together. All right, so jumping around a little bit to Lattice. So what was the initial thesis when you founded the firm, and how has that changed and not changed over time?
Yeah, I think there were a few theses. Like obviously underlying every crypto venture fund is just a bet that like crypto grows, right? I think for us, it was like the second bet was that crypto founders would want to work with other founders. They would want to work with people who had like built companies in the space. And when we started the fund, and honestly still today, like a lot of like not that many crypto investors have ever actually like had operating roles or engineering roles or founder roles in this space. And the kind of third bet was just like partnering with founders on day one, you could do really well from a returns perspective, and just most funds had gotten really big. There was just like less and less capital that was designed to like back founders on day one. I think a lot of funds back then had like, you were just starting to see $2 or $3 million minimum check sizes, which like probably made sense for those funds with like where they were size wise, but it also just meant like if you were raising $1 million pre-seed round, like there were just less funds that could do those kinds of rounds.
Got it. So kind of the dual operator and also kind of sizing appropriately for some of those pre-seed, seed type of opportunities that maybe didn't need as much capital.
Yes.
So I guess if you kind of look at the environment today, I actually have a question for you on this. So looking at the environment today, 2024, do you see a lot of the generalist, non-crypto specific funds kind of coming back into the market, or are they sort of staying on the sidelines post FTX and all that?
I haven't seen that many come back in.
Yeah.
I mean, I think there's some where like one or more partners just like they believed in crypto. They didn't stop believing after FTX. Like Initialize probably fits into that camp where it's just like they were going to keep doing crypto. But I think a lot of the other generalist funds have left. And I mean, there's FTX, and then there's also like, if you're only going to do crypto when like it's cool, your track record is going to suck, right? Like you're going to be buying things at the top of the market. It's like, yeah, this is not to say that like clearly generalist funds can do well, like USV. They did Coinbase, and like they have one of the best track records of anyone in the space. And clearly they do non-crypto stuff, but they've also like, they believed. And they have done well enough for their LPs over the last 10 or 20 years that like they probably have a massive runway to do whatever they want because they like their LPs fully trust them. So I think you kind of need that because if you can kind of only get like crypto deals through IC when like ETH is above 2,500 or whatever, like it's just hard. Like it's hard to do well.
Yeah, you want to kind of consistently being a top of the market buyer in that case.
Yes.
So we have less of the generalist funds coming back in. At the same time, kind of as you alluded to in your last answer, the big funds in crypto have continued to get bigger and bigger. We talked earlier about A16Z crypto 10xing their AUM in the past 4 years or whatever. Paradigm has giant funds, Polychain, so on and so forth. How do you think about kind of competing for deals against those funds? Or is it that your check size, you're not even competing because maybe it's too early for some of those groups?
Yeah, so I think the latter is definitely true. Part of our strategy is just like we want to be in the less competitive part of the market. Like, I think we have a compelling offering for founders, but is our brand on par with like Andreessen or Paradigm? Like, pretty clearly not. And the second then is just like we want to compete and we want to be the best. And part of the reason I'm here, besides wanting to catch up with you, is we haven't done a great job of getting our name out there and explaining kind of like the story and how we work with teams and our track record and all of that. And so you mentioned some of my long range tweet threads. That's another kind of effort in that direction where for better or worse, like if you're a venture fund, you're selling money, right? It's kind of like the ultimate commodity. So the brand you can layer on top of that matters a lot.
Absolutely. And so I guess within that, kind of the thinking of competing for deals and maybe looking at underappreciated sectors within the market, what are kind of the areas that are exciting you today that maybe, let me have a two-part question here. What are the areas that are exciting you today? And then maybe what are the more contrarian opinions that you have, if that is even the right way to think about it?
So I think generally we've been excited about products we think can get a new audience excited about crypto. And it could be I described that. A lot of that is kind of like stuff closer to the application layer, but it's also like infrastructure that enables that set of applications. And so DeepIn is a category. We made a number of investments where, we think like you meet the people who are like early Helium miners. It actually tends to like not really be crypto people. It's like people who are into like networking or IoT or like, they're both nerds, the crypto people and those people, but like it's like a different type of nerd. So that is a category we've kind of consistently invested in over the last 2.5 years and, remain really excited about the potential for DeepIn projects to get a new audience excited about crypto. I think contrarian take, I think it's like a pretty bad time to be investing in venture markets and we are slowing down dramatically. So maybe, I can't speak for everyone else's book. Okay. Like that is a view I hold that like everyone's aping into these massive late stage rounds. And so maybe that is contrarian.
So diving a bit more into that, why is it that you guys are cooling? And do you have a structure that allows you to do liquid stuff as well? Or I actually don't know how you guys are structured.
We do. We can buy liquid tokens and look, my view is this. Like, if you do a private deal you probably, let's just say like, yeah, a team doesn't launch a token for 6 to 18 months. Generally, these like vesting cycles, or you have at least a year cliff. Let's just say it's a year cliff, and then you generally vest over like 2 to 4 years. So let's just use like the point when you'll have half your tokens is kind of like when you have like some size in that position. Like that's like 3 to 4 years down the line, right? So like clearly these private deals get comped to liquid markets, which is like reasonable. And so liquid tokens are way up, private deals go up. The closer you are to TGE, right, like the less of a time discount. So those tokens are like the most up on the private side. And so people are aping into these things because they think they'll trade higher in public markets than they will in private ones, which is not insane, right? Like you can probably raise money on markups, like you can tell a good story there, but like where are these things going to net out in 3 to 4 years? That's really what you care about. And my view is like there's probably better risk-adjusted returns just buying liquid tokens whenever the markets come down. So we're still doing like seed deals where like I know we're not going to have tokens in this cycle. We're not making that bet. And these things are just less competitive because like, yeah, you're going to have like liquidity much less quickly. So yeah, I don't know. That's just like, yeah, we've kind of learned to just like let it slide and accept that like we do this in a long-term time frame. And, you know, obviously what does the next cycle look like? Will there be another one? Like who knows? But that's kind of like the game we're playing right now.
I'm not as attuned to some of the markets as you are, but do you see a lot of late stage rounds happening now? Like, I don't know how you would define that in crypto exactly. Maybe like 100 million plus, 50 million plus, third round of funding, fourth round of funding.
Yeah. I mean, you know, people in crypto love to reinvent the wheel, right? So it's like the Series B, the Series C, like that terminology is kind of out the door. Let's just call it pre-TGE rounds. I mean, you saw Eclipse announce their $30 million round, was it 2 weeks ago? Eigenlayer, $100 million. I've heard of a bunch more getting done that I think you'll see announced. I think it's Monad was like leaked that like Paradigm was doing this big round. Yeah. Like everyone wants to deploy money before like the bull market really gets going, assuming that that's what happens. And like, understandably, you want to show marks, right? So you want to like do things as quickly to TGE as possible. So yeah, a lot of these deals are happening.
That's kind of fascinating to me. I feel like that would have been one of the takeaways of what not to do from the last cycle, where even the things that I would have considered, you know, the bellwethers of that time, like an OpenSea or something, you know, all the public filings have come out around where people kind of mark that at now, but that final round they did, or even the last 2 rounds they did, were sort of capital eviscerators, but from a seed perspective, it was still an amazing deal. So I don't know. I guess I'm surprised that people do still.
Well, that's an interesting one because there's still no token, right? So like maybe there never will be. I don't know. But I think it's a little bit of an edge case. But like you're right, and for what it's worth, like some of these deals where people thought the valuations were crazy at the time, like WorldCoin at $3 billion, actually look really smart in retrospect. So it's not to say you can't make money. I think the biggest question for me is like, look, we always joke internally, like you can buy any token you want at the price you want. It's just a question how long you wait. Like you're willing to wait. And so it's not like, oh, just doing Monad at $3 billion, will that make money? Like on the long run, like probably. Let's just say it will. But assuming that we see another 50% drawdown, it's like, well, would it be a better risk-adjusted bet to just buy ETH at 1,700 and you're liquid and you can exit that position anytime you want? I don't know that much about Monad, so like, I'm not going to like say yes or no, but like that's kind of that's how we think about it, right? It's all like relative. It's not absolute.
So you piqued my interest here, but how much of these bigger private late stage rounds, and just Monad's the example, I'm not picking on them in any way, but something like that, how much of that gets done because people have to invest in venture type of things versus they could just buy Ether, Solana on the market or something? Say even Aptos, Sui, whatever.
Well, I mean, it's impossible to say, but I think probably some of it. And let's break down have to do venture bets into 2 things. One is like, do you actually like structurally have to do it? A lot of US venture funds are set up under the venture exemption, which basically means you can have like a pretty big venture fund, a few $100 million, without a ton of regulatory overhead. You don't need to be an RIA. You don't need to do all of these annoying filings. But the restriction on that is that 80% of your investment has to go into like qualified investments. which basically means like not liquid tokens. So for some of those funds, like, yeah, you couldn't go buy 40% of the fund in liquid tokens. The second kind of have to is just like, what did you tell your LPs you were going to do? And generally it's not like you didn't tell your LPs, oh, we're going to go dump 50% of the fund in ETH. Because they probably would just be like, well, I could go do that and not pay fees on it. And so I think like there's probably like more and more acceptance of venture funds doing liquid, tokens than there was like 3 years ago. But like, I would assume most LPs are still like, hey, you told us this is like a venture fund. We invested in this from our venture book. Like, we have like a liquid book. We didn't underwrite you as a hedge fund. So like, do the venture thing.
Yeah, that checks out to me. So, all right, we've talked about the craziness in the late stage market. You guys are still certainly looking at stuff in the early pre-seed seed market. What is the sort of general founder archetype or type of deal that you guys are targeting? What's your perfect deal when it comes across the table?
Our perfect deal. I don't know that I've ever been asked that question. I think the things we like to think about are like, one, does this team have the resilience and grit to build through multiple cycles? A lot of the success we had personally, like Dune, OpenSea, some of the angel checks we did that did well, like no one gave a fuck about those companies for a long time. I'm sure the Dune founders have like talked about this in podcasts or whatever, but like every fucking crypto fund passed on that deal, right? They like had to make money because like no one would invest in them, and they built through multiple cycles and they've paid off for it. And look, like, dude, a lot of companies pivoted out of crypto last year. A lot of games did. A lot of like random DAO or whatever things pivoted to AI. Like, as a founder, you had to have like some irrational belief that this stuff was going to work in order to stay in crypto. So that's a big thing for us. And some of that is like, hey, like, why are founders doing what they are doing, right? Is it because they think crypto is cool, or is it because like they tried to do something else in crypto and they couldn't because of X and now they want to solve X? I think B is like trying to like suss out originality of an idea and like what kind of problem you're solving. This sounds really simple, but like we try to deeply understand like who are you solving a problem for and how much do they care about it? There's a lot of crypto that's like nails looking for hammers. And so beyond like the obvious that like you need people to like use your product, understanding that a founder like really did the work to like talk to a customer set and like understand like what their problems were, that matters a lot to us. So those things tend to be exciting to us. And like, to put that into example, we're in the process of like working on a deal right now where like a team, they had a DeFi project and they basically ended up deploying it on a few different protocols, kind of trying to chase product market fit. Like, they deployed on one L1, that L1 became less hot. They deployed on another, and they're basically building something to make it easier for teams to like deploy on multiple L1s. And they're like, the team spent 3 years trying to solve the first thing. And so we feel like, yeah, it's early, like this new thing is probably going to take a few like turns, but like they are very motivated to do this. And that motivation is very genuine. And so that gets us like excited.
Yeah. Something I've noticed and felt within crypto is that maybe compared to other industries, like if you were doing software for trucking or even AI at the moment, you kind of don't have to have the same passion and somewhat irrational-ish belief as you do in crypto sometimes, as the market is so volatile and you do need to be able to kind of keep your head throughout each of those. I mean, I certainly thought about leaving in the depth of the 2019 period. Worked out and very happy that I did not, but I think everyone has those moments, and actually kind of getting through them is always a great sign.
It's hard. And the difference between like trucking or whatever is like in crypto, like you look at your peers like, oh, this team stopped working on what they were doing and they rolled a fucking meme coin.
Yeah.
And now they all have mansions in Miami, right? Like you both need to like have this irrational view on the industry and be willing to take a very long-term perspective, which can be hard when your peers are making a lot of money doing more short-term things.
So one of the threads that you had recently that I found very interesting was about this idea in crypto that being contrarian is not always the way to make money. Whereas I think if you look at traditional tech, many of the best investors will say being contrarian is right. That's the quadrant you want to be in, blah, blah, blah. At the same time, you just mentioned your investment in Dune. I've also heard many times that OpenSea was one of these, rounds that no one wanted to do type of thing. How do you kind of square that in terms of Were those just, you saw something early that was inevitable to happen, or those were kind of contrarian at the time?
So I think you can make money being contrarian and writing crypto. You definitely can, but you don't have to be. Whereas I think in venture, you kind of do. And I think the other distinction is that, in venture, you don't need your investments to become consensus because people value cash flows ultimately at the end of the day. You invest in a tractor SaaS business in Indiana and none of Indiana and tractors, that doesn't have to become hot. If the business is throwing off $500 million a year in free cash flow, someone will buy it, right? It just doesn't need to be hot. It'll trade higher if it's hot, but it doesn't need to be. So in crypto, you don't have a universal asset that people value. It's just generally attention. And so I think it's not that you have to make consensus investments. It's just you need the investments you made to become consensus. Which is maybe a subtle distinction, but I think a very different one. But going back to my first point, let's just assume normal venture markets are efficient, and yes, if if an investment is consensus, there's a bunch of venture funds that will do it, and it will get competed, and it will the price will go up, and it's harder to make money. Whereas in crypto, I don't know, you can kind of just make these momentum investments, and a lot of times they work, right? People funding these new L2s, there's probably a dozen of them that announced rounds in the last 2 months. Is that contrarian? No, not at all. But you'd probably make money. Once VC started talking about Solana in more publicly, call it September, October of last year, yeah, you should have just bought Sol and started investing in Solana things, right? Clearly, the momentum was going to build there. So yeah, it's not to say you can't. Clearly, there are really good investments that were contrarian at the time. Not at all saying that that's not the case. But those investments had to become consensus at some point. And the way a lot of funds have made money is not contrarian things. It's kind of just being early to the party.
I guess maybe to dig in a little bit more to something unique of crypto and token markets is that perhaps so much of the value of the network or ability to attract users from incentives does come from the market valuing a token at a good multiple, right? That's how L2s are able to attract so much capital through grants and stuff, for example. With the tractor company, it doesn't particularly matter what the tractor company is valued at as much as it's making money, and if they needed a liquidity event sometime, someone would value that fairly. That maybe feels like a distinction there. And actually, even just kind of thinking about your examples of Dune and OpenSea, those didn't require the market per se to value those since they were just looking for a next round of funding from equity investors. So I guess there is kind of some distinction there.
Yeah, I think so. And I think, look, these markets could change. I'm not saying this is going to be the case forever, right? Maybe, I don't know, tokens end up not working and everyone wants equity businesses in the next cycle and people value cash flow. Or maybe, yeah, the institutions are finally here. I've been promised that a few times. It hasn't happened. But maybe with the ETF, institutions come in and there's a bunch of DeFi tokens that throw off cash. Maybe they want to own those. That's totally possible. But I think it's just it's not pretty clearly not the way these markets work now.
How do you think about investing in and valuing equity versus token businesses as well?
I mean, so there's the literal question, which is if we think that value is going to come from a token, we value the equity at zero. And then there's, I think, the broader question, which is what you're asking, is doing traditional equity businesses versus token businesses. To be totally honest, we're not very interested in equity businesses. We've made investments in some of them have done really well, Gold Sky, which is becoming one of the leading crypto data providers, is awesome. And the founders are fantastic. And I think it's going to be a really good outcome. But I just think we've been working on this token stuff for 6 years. I think it's where we have a little bit deeper knowledge and it's where we want to focus. So that's really where our focus is going forward. And even looking back, probably 90% of the investments we made out of our funds have been in the direction of tokens.
Yeah, I mean, stick to what you're good at.
Yeah, fair enough.
That said, I know one of the core tenets of your firm is finding defensible moats for crypto projects. I think within equity businesses, there's a well-studied discipline of the different kind of moats that businesses can have. How do you think about moats within token projects where everything is open source and can be forked and copied? How do you think about identifying those?
It's hard. One is, I think that so actually one, it is harder to build moats in open source protocol businesses than in traditional ones, for sure. I think like intangible things like brand actually matter more than people thought. Like this whole forking thing, it's actually not really played out, right? Like,
fair.
SushiSwap's kind of dead. Maybe I'm like wrong, but like I don't think there's been that many like successful forks. I think actually Trader Joe was maybe like a fork of Uniswap originally, but like anyway, like it hasn't been that big of a thing. I think what we're seeing is that proprietary distribution and brand can be a moat, and I think that those teams that have that are like vertically integrating down the stack and building deeper to the protocol level. So I think that like the Blur team launching Blast is like a good example of this. Like, is Blast like that innovative on the technical side? Like, not really. But it's like the incentive design is pretty novel, and clearly they have built some audience and brand recognition, and so like Blast has done really well. And I think like Galaxy, CyberConnect, which is an investment from our first fund, which has built one of the largest like crypto social protocols, they recently rolled out their own L2, which is like the L2 for social. And they're not going to be like the last ones to do it. So I think that like just all of this infrastructure, these roll up as a service providers, et cetera, that have like made it much easier to roll your own roll ups or your own L2s, they're just helping to kind of commoditize some of the tech advantage that some of these teams have. And so I think like the brand and the distribution just becomes more important.
So by distribution, in this case, is that, I guess maybe I think of distribution a couple different ways, right? One way could be, Coinbase supports your product and they have 50 million users and you can use distribution that way. I guess the other type of distribution would be just having maybe kind of incentive mechanisms that can attract people, or how are you kind of defining distribution in this case?
I'm just like eyeballs.
Okay. Yeah.
Yeah, it's not like that's going to get printed in the Harvard Business Review anytime soon. But the whole like all this stuff is really nascent. I think it's just really like, do you have attention on you?
Exactly.
Blur, as an example, very clearly did, and I think you'll see like more teams that have that roll their own. Maybe it's not always an L2. It's like whatever, a roll like something, but like they're just going to continue to integrate kind of down the stack.
Right. So I guess kind of even thinking about pattern matching then, do you think that we'll see more teams kind of continue to follow that playbook of trying to own just this kind of entire stack of their own to, ideally one, capture more value, and two, provide a more seamless integrated experience for users?
Yes, 100%. I mean, maybe DYDX was ahead of the trend. People were kind of calling it app chains early on. Now maybe it's like app rollups. But yeah, look, it's like from a purely cynical perspective, it like creates more value for the token because like it's like, oh, it governs this like app L2, can earn sequencer fees, right? It's like a lot of narratives you can spin around it. And for the teams that actually do have genuine distribution, I think it can work. I think for a lot of teams, it's just like, a lot of crypto is just people chasing their tail and like kind of chasing whatever the narrative is and trying to build into that. So definitely some of it is that. But yes, I think we will see it continue.
So on the point of attention and eyeballs, I very much agree with you on that. And I think it's one of the reasons why you see like these key opinion leader KOL rounds and stuff like that. People are selling equity or tokens or whatever to people that have attention to, by proxy, kind of get some more of that. At the same time, crypto marketing kind of feels like this dark art. It's a little bit dirty sounding sometimes, I think, when people talk about it. How do you advise teams on the best way to, in an organic, authentic kind of way, get eyeballs on their projects?
Yeah, I think it's just like at a high level, it's just like narrowly defining, like really just defining an audience and trying to serve them as well as you can. Like Blur was like, okay, pro NFT traders. People who are into NFTs who trade a lot. That is who we're going to go after. And from like a number of people perspective, probably wasn't that big. How many of these people exist? 5,000 maybe. And they just served them really well. And like that did really well for them. So I think it's just like trying to like define a really clear audience early on and just trying to like serve them as well as you can.
Makes sense. So I'd like to get a little bit more into kind of the nitty gritty of making an investment at Lattice. So can you walk me through how an investment decision actually gets made? Is it collaborative? Do you and your team divide and conquer? What does the Monday morning meeting look like?
We do them on Tuesdays. I guess we try to be different. I would say like investment process is relatively autonomous to start. So generally, like, one person owns like the process from start basically up until IC. So if I brought in a deal or like whatever, it was a category that like I cover, I'll usually do a call with the team. If it's interesting, do 2 or 3 more, try to kind of triangulate data points. For example, like, talk to customers. If the founders like worked at a company where like we know that team, like we'll talk to those people and kind of try to get a sense of like what type of people they are, and then eventually bring it to IC. Our IC is small; it's 3 people total, so like it's pretty informal, right? Like we just talk, and sometimes there's disagreement. I think like more often than not, if 2 people don't want to do a deal, they kind of like, if we just talk enough, like I probably bring deals that I get talked out of more than anyone else. Like, Mike and Pierre will kind of like poke holes in it, and they'll like, well, like, this team tried to do this and that was similar and that didn't work for these reasons. And like, more often than not, I'm like, you know what, that's fair. Like, I was excited for these reasons, but I now kind of like, I get where you're coming from, and like, all else equal, I think maybe it doesn't make sense to do it. Sometimes there's disagreement, and usually our default is if someone really wants to do a deal, we should probably do it, because like a lot of these things that are maybe controversial can do well. But yeah, it's a relatively, informal discussion, and that's by design. Like, I don't think having a 10-person investment committee for like a seed stage company makes sense, right? There's like very rarely data for us to look at. It's kind of just like sit there talking about how the world you think is what the world is going to look like, in the future.
Well, since you mentioned the example of you bringing something to IC that doesn't get done, is there actually a commonality of deal that maybe you get excited about and then talked out of? Maybe you get excited about consumer stuff and the team thinks that's tough, hard, or...
Yeah, I mean, I think a lot. Like, I think definitely, like, once we consider the left curve take and where the market values things, sometimes I get talked out of it. Like, I'm trying to think of a good example. Maybe it's something like, hey, like, whatever, this is like an app thing. And like Mike and Pierre were like, okay, but look at these like other app things. And this is where they're like valued in the market. And it's just not very high. And that's like a kind of a very simplified example. But like, yeah, a lot of the times it's like, okay, you know what, you're right? Like, how likely is this to really be able to return the fund? And that's like a common place we get hung up. And sometimes we're wrong, right? Because like the way the market values things can change. But I think generally it's a good reason to not do a deal.
So that actually gets into another one of your threads recently, kind of the applications versus infrastructure one. And you referenced the Crypto Cannon piece from Joe Monegro around infrastructure capturing most of the value in crypto. And I say for better or for worse, that seems to have been still mostly true today. So that said, how do you think about investing in applications in that case, right? I mean, the market seems to have said, hey, you should just invest in infrastructure, even if it is a bit expensive, because it goes crazy and people understand it and they like making those kind of plays. How do you guys net out on actually putting dollars to work there?
So I think like the types of consumer businesses we're excited about tend to be pretty specific ones. And I'm going to describe it. We definitely still haven't like coined the tagline that's like really succinct. But generally, like, they're crypto native in their value capture. So, like Web 2.5 businesses where it's like, oh, it's like a fan engagement thing, but there's like NFTs. Like, I'm not excited about that. Oh, it's like a AAA shooter, but there's NFTs. But I'm not excited about that. Like, we want things that are like very crypto native, both in how they operate and in their value capture. And ideally, they're super weird. Like Karate Combat, I mentioned earlier, like, it's just weird. It's like, oh, it's this Karate League with a token? Like, what is that? But then you kind of think about it and you're like, okay, well, like, you have this, like, audience that loves sports gambling. Like, crypto is not that far off, right? And kind of just left curve it. And it's like, okay, if this works, like, I can see this audience getting really into this. And that's, like, still early, but it's played out to some extent. I think in like the Quest platforms, like Layer 3 and Galaxy are both portfolio companies. They kind of both now do things beyond Quest, but that was like the initial thing. It was just like, you have these large protocol treasuries, they need users. There's kind of like this crypto native way that value is like transferred from like protocols to early users. And we think like these things can capture value there. And that's like largely proven to be true. Although also those companies are both still pretty early in their journeys. So I think like it's not just like, oh, we love consumer products. It's like there needs to be like pretty specific things that we like. Some deep in things are consumer, and I think there it's just like we've seen that like these token flywheels can work. And so when we see them applied to new markets, again, like it needs to be a reasonable market. It needs to be easy enough for people to like do, but like we get excited. And then I think the last thing is like we have a thesis that like if these things work, these companies can just build down the stack, and like kind of the way them rolling their infrastructure manifests is going to be different in every deal, but like clearly these teams can move down the stack. Like CyberConnect, which is like on paper, like, yeah, they are worth a lot of money. Like they're one of the best performing things in our first fund. They've done this, right? Like they have one of the largest crypto social protocols, and like they are rolling their own L2, and they're just going to continue to own more of that stack. And I think it's unclear, but I think like the market will like create a premium on that just because like these things can kind of get valued more like infrastructure than apps.
Right. And that was something I picked up on the thread too. I don't know if you meant to say this so explicitly, but I read it this way, which is apps can certainly graduate to be more like infrastructure. You look at something like a Uniswap that presumably on day one was an application. Today, it's something that people build on top of. It's kind of this fundamental piece of crypto and DeFi and any chain where it launches. It could have its own chain, I suppose, if it wants it to. But yeah, it's kind of like graduating and evolving to become infrastructure. And then ideally, valuation premiums maybe catching up with that.
Exactly.
All right. So back to the investing process at Lattice. You were an operator before starting the firm. You saw many token listings and stuff, CoinList. How has that experience as an operator informed how you now invest and, even work with teams post-investment?
So I think on the investing process, it's kind of like a spidey sense, but I think just like trying to understand, like, does this team understand how these markets work? Because like they're crazy, right? Like teams understanding how important like attention and eyeballs is in crypto is really valuable. If a team's like, oh yeah, like we're going to launch like the best L2 and it's like the best technology, and so everyone's going to use it. Like clearly, like, no, that's not how these markets work. And like, we're definitely not going to make this investment. And then I think like it also has just taught us like, for example, like we have not invested in many highly regulated businesses. We haven't done any centralized exchanges, any like custodians or like fiat on-ramps and stuff like that, just because like I lived through getting like 48 MTLs at CoinList. That process sucks. It takes a long time. And you can build a moat if you do it. Clearly Coinbase is a very valuable business, but like it's hard. It's really hard. So I think it definitely informs our investing process. And then I think how it informs kind of how we work with portfolio companies after the investment is really just like, we know what we've done and we know what we know. And there's a lot of stuff like we don't know, like recruiting engineers. Neither me nor Mike have much experience doing that. Like we're not going to spend time with founders on that because like we're not going to add much value. But like if they're going through a token sale process or trying to think about like day one token distribution or token economics, or like, hey, we're launching this new L2 or L1, like how do we get people to deploy here? How do we tell the narrative about what we're doing and building? Yeah, we've been doing that for 6 years. Like we, I think, have a more informed perspective than most people.
Understood. So on the, I want to come back to actually just riffing a little bit on that, just kind of thinking about where directionally you guys are, taking your swings in the market today. You had this thread recently about kind of being directionally right versus directionally wrong. How are you guys thinking about, I guess I'm going to take this two ways. One, how are you guys thinking about what direction do you guys want to take these swings in? And two, if you were someone new to crypto today, what's like kind of a white space that you think is an interesting place to take one of these directional swings?
So I think on the first one, it's just been like thinking deeply about when we make an investment, what bets are we making that underlie that? I think one example is like, I think we've gotten better at this. So for example, like we are excited about Filecoin. We started buying Phil probably in Q1 of last year, and think like the FVM is really interesting, all the crypto AI stuff. I could talk for a while, but like we're excited about Filecoin. So we own Phil, and we've looked at a bunch of teams building in Filecoin, and I think a lot of them are awesome, but we have not made any investments there because I think it's kind of like an embedded, you're making a few bets there, right? Like it's still unclear if Phil is going to work. So you're kind of making like an additional bet that Phil is going to work. And we kind of come down to like, well, we could just have Phil and it could be liquid. And like, we think that that is like the right way to express that view rather than any of its underlying investments. White space for people to try, that's really hard. I think emerging markets are still like pretty under-indexed. You know, CMT has made some investments in Africa. Volt has done some stuff in LATAM, but like on the whole, like there's definitely less venture dollars chasing those markets. I'm like probably not the most informed person on like the opportunity set there. Maybe there's a reason there's not venture dollars chasing those investments, but like there's probably some really awesome companies building in Africa, building in Latin America, where there's just like less VC eyeballs on them.
Yeah, I guess maybe to the, we talked a little bit earlier about pattern matching. There's probably just less to map to there in terms of what's worked so far. But for someone new entering the space, maybe that's kind of exactly the thing that is actually the useful opportunity to try and carve out.
I think so, yeah.
So as we're kind of coming to the end here, I'd like to go back to one of your other posts that was the 2021 retrospective of seed stage projects. And I was kind of surprised at how poor product market fit is for so many projects. I think the stat that you shared in there at the time was that 4% of Ethereum-based projects in for the class of 2021 had achieved product market fit, followed by Solana at 3%. Based on your experience, and I guess some of the analysis that you did here, why is that? I mean, that's definitely, I think, poorer than traditional tech. What is it that differentiates a team that maybe can versus can't find product market fit? Is it work that went in before launching? Is it after the fact hustle? How do you get product market fit?
I think it's a combination. I mean, look, I think luck and being right is like part of it.
Yeah.
Like the Magic Eden, like they made a directional bet on Solana and they were right. But they also hustled harder than anyone else. Like, I remember talking to some early team members and they were like, they would like literally monitor like contract deployments on Solana and try to support new NFT collections launching an hour before anyone else, right? And like, that's just fucking hard work. So I think that's part of it. But I think luck, like everything in life, has a big impact. Honestly, like, grit and resilience and just staying in the game, like, yeah, these markets are hard. And like, if you just survived through like the last 18 months and like whatever market you're building in crypto, chances are like it's much easier to like sell products and get users today, right, than it was a year ago. So like, even just staying alive in this game can be like a competitive edge.
Absolutely. And I think one of the ways maybe that teams think about product market fit or think about enabling product market fit is through tokens. Something you've also talked about is kind of the trend of prematurely launching a token. How do you advise teams on when the right time to launch a token is and how they should think about that impacting whether the product market fit is real or not?
So I think the answer is a little bit different now than it was maybe like 2 years ago, because like I think this points paradigm is pretty good in that it just like gives teams a little bit more flexibility to like tease at the token, but still maintain some flexibility on exactly what that looks like. I generally think waiting longer is like good, because like you're right, like once you introduce all this stuff, it is harder to suss out true product market fit. We always tell teams the best time to launch a token is in a bear market, but no one listens to us. So like, teams all want to launch tokens in a bull market, which isn't necessarily bad. It's just like our view is it's better in a bear market.
Why do you advise? I mean, I can take a guess, but why do you advise that way?
Yeah, look, I think you look at a lot of the most resilient communities in crypto, Chainlink, Solana, there's a bunch. Like, your community being able to accumulate the token at a cheap price matters a lot, right? Like, Solana was sub $2 for probably 3 to 6 months on like exchanges post-launch. And so like, Chainlink was cheap for a while, right? Like if your community is able to have like a lot of upside in what you do at a low cost basis, that's really important. And going out at a $10 billion FTV, like, yeah, sure, people can get the airdrop, but like, where does that max out? Probably not that much money. So it just means like, yeah, if you do an airdrop and you launch at $10 billion, your community is never going to be able to get more upside beyond the airdrop.
Correct.
And so you never want to have like the ICP chart just down only from launch. Yeah. That's bad. Like it's hard to recover from that. So yeah, that's what we tell founders. More often than not, people don't want to listen to us, and that's okay.
Right.
But I think that is an underexplored view.
So as we're coming to the end here, you mentioned airdrops. I'd like to talk about that for a second. So, I mean, it seems to me that airdrops are like completely played out in that, other people have said this, so it's not just me, but a new distribution method is novel the first time it happens, and then just sort of has diminishing returns over time to, the point it's just farmed into oblivion. And it kind of feels like that's where we are with airdrops now, but teams continue to do them because of an expectation and maybe some legal and regulatory reasons. Where do you fall on airdrops being productive versus not productive for teams that are launching a token?
Look, I think crypto aligning financial upside of products with their early users is awesome. It's way better than that paradigm in like traditional software. So I'm a fan. I think that there is a little bit of just expectation now, and so it's kind of hard to not do one, which maybe your community feels jaded if like you're launching X and every X competitor has done an airdrop for their community, your community's going to be pissed if you don't. So I think in this paradigm, they're kind of table stakes. I don't think if a team pitched us and was like, oh, we're going to get users through an airdrop. That's our growth strategy. I'd be like, okay, but everyone else is doing that, right? You need something else. So yeah, I think in this current paradigm, teams kind of have to do it. I don't know that lasts forever, but at least for now, yeah, I kind of think it's just part of the game.
Yeah, I'm excited to hopefully see some new mechanisms. Like you, I also enjoy points. I think they're a great way to tease and test things without the indefinite commitment of a token going live out there. So, all right. Well, thank you for taking so much time to speak today. If someone wants to get in touch with you, learn more about the firm, talk about you guys making an investment, what's the best way to get in touch and learn more?
Yeah. You follow me on Twitter and DM me there. My handle is just my first name, last name, ReganBozman. Yeah, you can find me there.
Awesome. All right. Well, thank you once again for taking all the time to speak today, and thanks everybody for listening. Talk soon.
Thanks for having me on. Yeah.